Good morning students. In this video lesson, how to write journal entries in the books of accounts by using the principles. Those are personal accounts, real accounts and nominal accounts. By using these three principles, how do we write journal entries in the books of accounts? So, let us see by doing one problem. Here we see one problem, that is journalize the following transactions in the books of Prabhu. So, here in 2007 on January 1st started business with cash, that is 40,000 rupees. On January 2nd purchased goods for cash, that is 8,000 rupees. On 3rd sold goods for cash, that is 7,000. On 5th received cash from Murthy, that is 1,000 rupees. On the same way, next transaction on 18th cash paid to Murthy, that is 500 rupees. Next one, on 21st purchased goods from Y, that is 14,000. Next on 31st goods sold to Z, that is 6,000. So, these are the monetary transactions we have to record in the books of accounts by using various accounting rules. So, let us see one by one. Here whatever the transaction we have, whatever the monetary transactions we have, so each and every monetary transactions we have two aspects, that is giving aspect and a receiving aspect. So, that we discussed in the concepts also, dual aspect concept. Each and every transaction will have two aspects. So, in the same way here also one transaction. So, let us take any transaction, we will have two aspects, that is giving aspect and a receiving aspect. So, let us see one by one. So, now we see the pro forma will be like this. The pro forma is journal entries of Prabhu. So, here we have 5 columns, that is first column date, second column particulars, third column ledger folio, debit rupees and credit rupees. So, here in the date column we have to write the date, on what date the transaction is occurred, that we have to write in the date column. The second column, that is particulars, in that particular column we have to write two aspects, one is debit aspect, another one is credit aspect, that is giving aspect and receiving aspect. And at the bottom of that entry we have to write, at the bottom of entry we have to write at the bottom of the entry we have to write a small description, that is known as narration. In the ledger folio column we have to write page numbers, the debit rupees and credit rupees, giving aspect rupees and receiving aspect rupees. These are the columns we are already observed in theory part. The pro forma of journal is like this. So, in this pro forma we have to write these transactions. So, what is the first transaction here? In 2007 January 1st started business with cash, So, here the person is Prabhu is started business with the cash. So, here according to business entity concept, business entity is separate from the person, the proprietor Prabhu. So, that is why the person is maybe receiver, maybe giver. So, here the person is giving cash to the business firm to start the business, that is the aspect. So, in the business we are receiving cash, at the same time the person is giving benefit to the firm. So, here we have two aspects, one is debit aspect, another one is credit aspect, credit aspect. So, that is why we have to write cash account. According to real account principle, we have to debit the cash, because debit what comes in, credit what goes out. So, in the view of business entity, we have to take this transaction. So, we are receiving cash, into the business. So, that is why cash comes under real accounts, So, that is why cash is to be debited, according to a real account principle, debit what comes in, credit what goes out, that is the principle of real account. So, at the same time the person Prabhu is giving benefit to the firm. So, debit the receiver, credit the giver, So, that is why the person giving capital to the firm, So, that is why capital as capital we have to credit. So, that is why 40,000 is to be credited. So, giving aspect and receiving aspect, both the aspects are equal in this transaction. So, whatever the amount is provided by Prabhu, whatever the amount is received by the firm, both are equal. So, that is why giving aspect and receiving aspect both are equal. So, that is why these two aspects are to be recorded as journal entry in the books of Prabhu. The Prabhu is sole trader, So, that is why below that the transaction. So, here at the end of the cash account, so whatever the aspect we are writing as debit, at the end of that we have to write DR, that DR indicates debit, cash account is debited, in the books of account. So, prefix is to be to, TO2, this TO indicates credited that aspect, So, cash account is debited, capital account is credited in the books of Prabhu, So, that is why here the journal entry is cash account debtor to capital account. So, that is a journal entry. So, for this journal entry we have to write a small narration, small description, that is being cash invested to start the business, So, that is why this is the small narration of that journal entry. So, that is why that is journal entry on January 1st. So, let us see the second one, purchased goods for cash, that is 8,000, purchased goods for cash, that is 8,000. Here we are purchasing, when we are purchasing goods, goods are coming inside, at the same time cash is going outside, So, according to nominal account, here both the aspects may be same account or the different accounts. So, here we see goods account is debited, means according to nominal account, expenditure is to be debited, that is 8,000 rupees, because we are purchasing goods. When we are purchasing goods, that is expenditure, that expenditure is to be debited according to nominal accounts. At the same time we are paying cash when we are purchasing goods, we have to pay cash. So, that is why cash is to be credited, So, that is why cash is to be credited, that is 8,000. So, when we are purchasing, we are receiving goods inside. So, that is purchase, nothing but expenditure. When we are expending, then only we are getting goods. So, that is why according to nominal accounts, goods are to be debited. So, instead of goods account, we have to write purchase account. Instead of goods account you have to write purchase account. So, cash account. So, for that the narration is being goods purchased for cash, being goods purchased for cash. Okay. Anything else? Right. Next, third transaction. Third transaction is goods sold for cash. Goods sold for cash, that is 7,000. So, you see goods sold for cash 7,000. So, here the earlier case purchase, in this case sales, we sold goods to cash, we sold goods to cash. So, here income we are receiving income according to nominal accounts, we have to receive, we are receiving income. So, in the name of goods. So, that is why instead of goods account you can write sales account. So, what we are receiving? Cash we are receiving. When we are selling goods, cash is coming inside, at the same time goods are going outside. So, that is why cash is to be debited and the goods is to be credited. So, that is why you can write cash account debtor to sales account also you can write, right. Next transaction, next on 5th date, received cash from Murthy, that is 1000 rupees. Here we are receiving cash from Murthy, we are receiving cash from Murthy. So, we are receiving cash from Murthy. So, cash is coming inside according to real accounts, cash is coming inside, So, according to real account, debit what comes in. So, that is why cash is to be debited, that is 1000 rupees. The person, Murthy is the person is giving or receiving, debit the receiver, credit the giver. So, that is why the person Murthy is to be credited. So, that is why Murthy 1000 rupees is to be credited in the books of accounts, in the books of Prabhu accounts. So, for that narration is being cash received from Murthy, we are receiving cash from Murthy. So, that is why we are receiving cash from Murthy. So, next entry on 18th date, cash paid to Murthy. So, earlier we received cash from Murthy, now we are paying cash to Murthy. So, it may be reverse. So, just reverse. So, you see in the earlier case, we are receiving cash from Murthy, okay, that is 1000 rupees on 5th, but here we are paying cash to Murthy, just to reverse to the on 5th date, just to reverse. So, cash account in the earlier case cash account data to Murthy account, in this case Murthy account data to cash account, just to reverse, just this reverse, because earlier we received cash from Murthy, now here we are paying cash to Murthy. So, just reverse, here the person debit the receiver, the person is receiving the benefit from the company, from the business organization. So, that is why Murthy account is to be debited, and in the same way cash comes under real accounts, cash is going outside. So, that is why cash is going outside, that should be credited. So, Murthy account data to cash account. So, that is why 500 this aspect, both the aspects are equal. Okay. Got the point, right? Let us see. And on 21st, purchased goods from Y, that is 14,000 rupees. We are purchasing goods from Y. So, here we are purchasing goods from Y. So, you see when we are purchasing goods, that is expenditure. So, according to real accounts, goods are to be debited, and the person is the giver, debit the receiver, credit the giver, the person Y is the giver. So, that is why y is to be credited. So, instead of goods account you have to write purchase account also. So, goods account data to y account, or you can write purchase account data to y account, that is amount 14,000 and 14,000. Okay, right. Next we see last one, that is goods sold to Z, goods sold to Z, that is 6,000 rupees. So, here we are selling goods to Z. So, Z account data to goods account, because Z account to goods account. Here we are selling goods to Z. So, instead of receiving cash, we are selling goods on credit basis, that is why the person is the receiver, Z is a receiver. So, that is why Z account data to goods account, or you can write sales account. So, 6,000 6,000. Here also we can observe both the aspects are equal. So, that is why in this transaction Z account is debited with 6,000 rupees and goods account or sales account are credited to y account 6,000 rupees. So, the narration small description is to be written under the both the aspects. So, that is why being goods sold to Z, being goods sold to Z, that is a narration, So, right, we will see one more problem, that is journalize the following transactions in the books of Krishna. In the books of Krishna, here 2006 October 1st, 2006 October 1st, Krishna started business with 65,000 rupees, 65,000 rupees, 65,000 rupees. Next, on 4th date purchased goods for cash, that is 14,000. On 5th date deposited into bank, that is 2,400. Goods sold for cash, that is 18,000. Cash paid to Gopal, that is 1,000. Goods purchased for cash, that is 15,000. Goods sold to Narayan, that is 4,000. Purchased furniture for cash 2,000. Cash received cash from Narayan, that is 750. Goods purchased from Sridhar, that is 2,000. Next, cash paid to Sridhar 2,000, 2,000. Withdrawn from bank, that is 1,000. Withdrawn from bank for personal use 250. Paid for stationery 200. Discount received, that is 700. Rent paid rent 500 and paid salary is 3,100. This is the problem. So, in this problem by using these journal entries, these transactions we have to write journal entries. Of course, just we discussed journal entries will have 5 columns. In first column date column, in second column particulars, third column ledger folio, fourth column debit rupees, and last column that is credit rupees. Here the person is Krishna, here the person name is Krishna. Krishna is started business with a rupees of 65,000. For that, the journal entry, let us see one by one. So, first we have to so each and every student has to understand there are two aspects in a transaction, that is monetary transaction and one is debit aspect, another one is credit aspect. These two transactions are to be observed. These two transactions are to be observed. These two aspects will be equal always, will be equal always. Of course, sometimes we may have composite entries also. So, whatever it is, a debit aspect, the total of debit aspect, the total of credit aspect will be equal. That you have to remind, that you have to keep in mind, right. Let us see, here we see here in first transaction, Krishna started a business with capital of rupees 65,000. That is a transaction. That transaction is done. That transaction is to be recorded as a journal entry in the books of Krishna. So, here cash is coming inside, cash comes under real accounts. So, according to real accounts, debit what comes in, credit what goes out. So, that is why according to real accounts, cash is to be debited, that is 65,000 rupees. So, Krishna is providing capital to the firm, that is 65,000. This is one aspect. Cash is coming inside, cash is provided by Krishna, that is 65,000. In the same way, the Krishna is a person, Krishna is a person, that person is a giver. So, that giver person is also is to be recorded in the books of accounts, that is credited. So, that is why for this transaction we have to write cash account debtor to Krishna capital account, Krishna capital account. Of course, in sometimes you may have more than one person, then only you have to write, otherwise you have to write, you can write Krishna capital account, otherwise you can write capital account. So, that is why here for this transaction the two aspects, one aspect is cash, another aspect is capital account. So, that is why Krishna account debtor to capital account, right. For this a small description, that is being capital invested by Krishna, because Krishna is providing capital to the business concern. So, that is why that small description is to be recorded here. So, next one, next transaction is purchased goods for cash, purchased goods for cash, that is 14,000 rupees. So, here 14,000 rupees worth of goods are purchased. So, when we are purchasing goods, that is when we are purchasing goods, that is an expenditure, that is an expenditure. So, that is why 14,000 rupees is an expenditure. So, that is why this 14,000 is to be debited. Why? Because according to nominal accounts, debit all the expenses and losses, credit all the incomes and gains. Okay. When we are purchasing goods, that is an expenditure. So, that is why purchase account is to be debited. And the next one, next aspect is cash. So, when we are purchasing goods, cash is to be paid, cash is to be paid. So, that is why this cash comes under real accounts, this cash comes under real accounts. So, according to real accounts, cash is to be credited. So, that is why 14,000 is to be credited, right. For that, the small description, that is being goods purchased for cash. So, that is on 4th date the transaction is done like this, goods purchased worth of rupees 14,000 rupees. For this transaction we recorded the journal entry. So, like this, right. Next we see on 5th date, on 5th date what happened, deposited into bank, deposited into bank. What we deposit in the bank, that is cash we have to deposit. Here bank is a person, because firm name or person name. So, whatever the indicated by a name, comes under personal accounts, comes under personal accounts. So, that is why here we see cash account, bank account. On 5th date, person name or firm name, that is why bank is receiving, debit the receiver, credit the giver. From our business organization, bank is receiving, we are debiting the bank account. At the same time, we are paying cash, so that is why cash is credited, so that is why 2400 and 2400. For that, the narration is being cash deposited into bank, okay. Next one, that is on 6th date, goods sold for cash, that is 1000. So here when we are selling goods, then 6 cash account debtor to sales account, earlier we discussed. So in this transaction we have two aspects, one is real accounts, another one is nominal accounts. So according to nominal accounts, we have to credit sales account. According to real accounts, cash is to be debited. So cash account debtor to sales account, 18,000 and 18,000. So here the narration is being goods sold for cash, right. Next 10th one, cash paid to Gopal. Here cash is being paid to Gopal. So right, Gopal is a person, that person is receiving from our business organization. So Gopal is to be debited, and at the same time cash is going outside according to real accounts. So that is why cash account is to be credited. So Gopal account debtor to cash account. So that is 1000, 1000. So narration is being cash paid to Gopal, right. Two aspects we have to identify. Next, goods purchased for cash, that is 15,000 rupees, purchase account data to cash account. Here also purchase comes under nominal accounts, cash comes under real accounts. So 15,000, 15,000. Here being goods purchased for cash, that is the narration. Next to 16th, on 16th date, what we did, what is the transaction? Goods sold to Narayan, the person Narayan, right. On 16th, Narayan account debtor to sales account, that is 4,000 rupees. Here Narayan is a person, so that is why according to personal accounts, the person is going to be receiver, that person is to be debited. Here Narayan is going to be debited, and the sales account, that is income. So that is why that is to be credited. The narration is paying goods sold to Narayan, right. On 19th, purchased furniture for cash. So here we are purchasing furniture. Furniture is an asset. Any asset comes under real accounts. So furniture account is to be debited and cash account is to be credited. So furniture account debtor to cash account, 2,000 and 2,000. Okay. Being furniture purchased for cash, that is 2,000 to 2,000. Next, on 20th date, received cash from Narayan. We are receiving cash from Narayan. So earlier we are sold goods on 16th, that is worth of 4,000. We have received cash 750 from Narayan, that is on 20 date. So cash account data to Narayan account. Narayan comes under personal accounts, cash comes under real accounts. Here both the aspects will have separate accounts. So in the same way, on 24th, purchase account data to Sridhar account. Here purchase comes under nominal account, Sridhar comes under personal accounts. So here being goods purchased from Sridhar, when goods are purchased from Sridhar, then the journal entry is to be recorded. So purchase account data to Sridhar accounts, that is on 24th. Next, on 28th, withdraw from bank, that is 1,000 rupees, withdraw from bank, right. So, when we are withdrawing cash from bank, we receive the cash, at the same time the person, bank comes under personal accounts, that person comes under the giver, bank comes under personal accounts category. So, bank is a giver. So, that is why according to real accounts we are withdrawing cash. So, that is why cash is coming inside. According to real accounts, debit what comes in, credit what goes out. Here whatever the applicability is there, that aspect only have to take. So, that is why a cash account comes under debit. So, that is why here 1000, and a bank account comes under personal. Here personal account also debit the receiver, credit the giver. So, here only one aspect, that is credit aspect, that is bank account, that is 1000 have to take. So, that is on 28th. Next on 29th. On 29th, withdraw from bank for personal use. Earlier withdraw from bank, that is office purpose. Here withdraw from bank for personal use, So, let us see drawings account. Here we are already discussed the person who is the proprietor, the person is differ from the business organization. So, that is why when the sole trader, when the proprietor is withdrawing something for his own purpose, that is to be treated as drawings. So, that is why drawings account that are to bank account. So, that is why 250 and 250. Here this personal purpose is known as is to be taken as drawings account. So, that is why 250 rupees is to be debited and 250 rupees is to be credited. Why bank account is credited? Bank account comes under personal accounts. These personal accounts, according to personal accounts, what you have to write? Debit the receiver, credit the giver. So, that is why bank account is to be credited. For that the narration is being cash with drawn for personal use. Okay, right. Next we will see discount on 30 paid for stationery, that is 200 rupees. Cash is paid for stationery, that is 200 rupees. So, stationery is an expenditure. So, when we are purchasing stationery, we have to pay something. Something means cash we have to pay. So, that is why stationery is one aspect, purchasing stationery is one aspect, paying cash is another aspect. So, that is why stationery account that are to cash account. So, according to nominal accounts, stationery is to be debited, 200 rupees is to be debited. According to real accounts, cash is to be credited, being stationery purchased, because when we are purchasing stationery, that is an expenditure. So, according to nominal account, all the expenses are to be debited. So, that is why stationery account is to be debited, and real account, cash is real account, cash comes under real accounts, cash is to be credited, that is 200 rupees. Okay. Next, for that being stationery purchased, right, on 31st, discount received, that is 700 rupees, that is 700. So, right, we see cash account that are to discount account. When we are receiving discount, that discount is treated as income, So, income comes under nominal accounts, So, that is why this discount is to be credited according to nominal accounts. So, cash account comes under real accounts, according to real accounts, cash is to be debited. So, we are receiving cash. So, that is why cash account is debited and a discount account is to be credited. So, then the journal entry is cash account that are to discount account 700 700, both the aspects will be equal. So, for that narration is being discount received, being discount received. Okay. Any doubt? Right. Let us see one more, paid rent. So, earlier income we received, now we are paying rent. This is expenditure, this is expenditure, this expenditure is to be, this expenditure is to be paid, expenditure is to be paid. So, according to when it is expenditure, 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 that expenditure is to be debited according to nominal accounts, according to nominal accounts rent is to be debited. So, that is why a rent account debtor to cash account. So, 500 and 500, both the aspects will be equal. How much amount we are paying as a rent, as a rent, that amount will be, that amount will be as an expenditure as rent. So, that is why a rent account debtor to cash account. So, that is why 500 500. So, narration is being rent paid, being rent paid. So, that is 500. Next one more transaction we have, paid salaries, that is 3100 rupees, paid salaries, that is 3100. This here also we observe the same thing, here also we observe same thing. So, salaries is an expenditure, salaries is an expenditure, salaries is an expenditure. So, according to expenditure comes under nominal accounts. So, according to nominal accounts, all the expenses and losses will be debited, all the incomes and gains will be credited. So, expenses, salaries, salaries is to be debited, okay, cash. So, according to real accounts, cash is to be credited. So, debit what comes in, credit what goes out. So, that is why cash is to be credited. So, that is why salaries account debtor to cash account 3100 3100, these both the aspects will be equal. So, for this the narration is being salaries paid, this is an expenditure. So, you observe all the, so when you observe both the aspects, both the aspects. So, in each and every transaction, in each and every transaction, each and every transaction, both the aspects will be, both the aspects will be equal. So, when you observe this transaction, when you observe this transaction, this 7, so on 31st 700 700. So, in the same way whatever the transaction, so transaction is done in a date, in a date the transaction is done. So, in that date, in a transaction we have two aspects, that is giving aspect and receiving aspect. So, you can observe, you can observe in each and every transaction we have in each and every transaction we have equal, both the aspects will be equal. So, 200 200, the same sense 1000 1000, 2000 to 2000. So, like this you can see, you can observe both the aspects, debit aspect and credit aspect, whatever it is in a transaction, in a transaction we have both the aspects, giving aspect and receiving aspect, both the aspects will be equal, both the aspects will be equal. So, like this, how to write journal entries in the books of accounts by using various principles, that is nominal accounts, real accounts, nominal accounts, real accounts and